Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So it looks like we got that move all the way to the fatigue point of a daily candle close resistance level / support structure, and also the diagonal fib 618 region. For the last day, we have an indecision spinning top within these two daily candle close support SR flip regions. These are significant levels that I put on. I only put daily support and resistance lines personally, and this is where we are currently meandering between at the 618 of this diagonal pitch fan to the upside. Let's go take a look at the liquidity on high block. What does that mean? Well, that's when people lock their liquidity into the charts to get burnt to a crisp without using a stop loss, and we get to see where those crispy characters lie in wait. So let's go ahead and run that for you. Shout out to everyone here. Yo, yo, yo. Last night I was running on 0 sleep, so I just ended up passing out after work. I figured we would just go sideways anyway, or have a slight retrace to the downside. So last time we were talking about these pools down below here. Let's just go reiterate where we were talking about last time. Pardon? Huh? So we still have this $303 million pool of 100x down here at 28,567. I have that marked in my charts. I don't know if you do as well, but this is a fair value gap that they could retrace back into easily enough. If we go into the current imbalance on the 1 minute time frame, we're down to $28 billion in long liquidity imbalance on the 1 minute time frame. We did see on this drop down yesterday that Rainier pointed out to you as we retraced into this fair value gap up here and dropped down into the liquidity here. They're pinged some 310 million in short liquidity, which they retraced to and took out both of the 100x and the 50x pools of those guys. The 25x pools are still on the table though. They could come back to that at 30,753 or head back down into the liquidity. The most stacked liquidity, as it looks like on these ramen noodles on both sides, is down in this region at 29,222, and if they start to head back into this, then they should start to gobble up the entire region and head down into this zone. The place where it starts to pause is at 28,210, and then you start to see a consolidation gap here. So coming down into this region, this is run for profit Friday in the Asian session, now at the daily candle close. Let's go ahead and expand our vision to the higher time frame pools and see what we took out over the last 2 days on this massive move to the upside. As we have entered here, as we've gone up, we have seen some interest on the 7-day time frame up in 31,650. There is some short interest, and the entire way is also getting paved with shorts in this region. The move doesn't necessarily have to be over. There is some thick regions of the happy campers that managed to get in down here that are still on the table from the 26K region, but that is a large gap down to grab as it stands currently in this current moment in time. There is more up in the region of 31.6 as opposed to down here, but coming down into a retrace into that initial liquidity to take out the 100x and 50x characters that took the ride up and are still open is something that we are looking at on that 1 minute time frame we just talked about. Let's expand our vision to the 1 month and see where that leads us. We were previously looking at a bounce up to 28.2, and we were pleasantly surprised with what ensued thereafter. We did talk about the image shift on the 3 month, how it looked like it was starting to get juicier in liquidity to the upside. We were waiting for that divergence to spawn on the liquidity on these lower time frame, on the higher time frames down here. After we took the 200 billion, was that enough? We started to see this shift of heat signatures to the upside. We're on the 3-month time frame. We still have 67 billion up at 31.2 that they could come back into just as easily on their run for profit if they're still targeting the external liquidity. If they're targeting the external liquidity, then this range is a personal area they could close out the week in this zone. If you go to the 6-month, has that thick $100 billion down at 24.6, 119 at 24.3. So if this is just a stop hunt rise, we have made a higher high. Have we made the higher high yet? I don't think so. With that surge up, we basically, no, we didn't make a higher high just yet, but the idea to come back and make a higher high is on the table. So coming into this region, 32.1 has 94 billion, 51 billion at 31.8, and this entire region has double digits of liquidity. The path to the upside is paved all the way up to 34K, 33.9, $50 billion up there. So this entire region, if they can choose to continue, they could, and it would pay them to do so. If we go to the 2-year time frame, 2-year time frame, we were talking about that heat signature up here at 32.4, $159 billion up at 32.4 that they could come back to. This has become quite the hot character. After coming down into the 24.8 region, taking out $147 billion on the external liquidity, must have been a nice divergence out of there. And we are currently gapping between all of these double digits. So are we heading into these regions which have the nice external juicy liquidity on this 2-year time frame? A lot of these shorts were opened from back in March 23rd to now is where this heat signature starts to occur. So all of these shorts that are developed in here are what they're aiming at, as it seems on this time frame. And then if you start to come up to the 34K and beyond, you're targeting these pools back from June of last year, and that is that. So holding 30K and flipping it into support is the idea that's trying to unfold here. Is this going to occur, or are we going to retrace back into those 1-minute time frame pools? I think the stop hunt, if we were going to go higher, it would be healthier to retrace back into these pools, and we'll show you why in a historical chart in a moment. So let's go into the Binance chart and take a look. Also, this coincides with the fib level of the 2 that we reached up into. We went slightly higher than that Hail Mary play, but this rise retrace idea inputted the math to go all the way up to this region, which we saw to fruition. So on the higher time frame of this impulse retrace of this longer idea here, you have some pools up in the 32 and 36 and 40K if that ever plays out on the daily time frame. All right, so let's throw on our oscillators and say what's up. I got to go into work in a moment. That's why I skipped the timer countdown. So let's just get right to it. Boom. All right, so what is this little bit of happiness? This is Momentum Master, link in the description. Scroll down to features, toggle at your leisure, see all the components in their glory, or read about each one as we go over it. All right, so let's go ahead and start from where the 3-day wants to close. So we have less than 23 hours for the 3-day candle to close in a bullish manner. So the 3-day time frame, previously we saw this money flow coming beneath here. We were talking about the money flow disparity beneath the RSI and how that insinuates coming to the upside. And we had the double bottom fertile crescent tidal basin here of the double bottom of the Williams starting to come back up nicely from the cloud. We saw that nice weighted moving average hold and push us to the upside on the 3-day time frame. Still good play on that. I was talking about the subtle support of the 5-day as well, and then we had a close of a candle which started to tilt our baseline in the favor of changing this narrative of the suppression that was occurring from April 16th that we also pointed out to you, and this potential coming up here on the 5-day time frame. The weekly. So the weekly is also oversold, and this is why we are seeing this subtle support shift. The oversold nature of the weekly and the money flow coming beneath the RSI also insinuating that this injection of money could come back in. Also, the Williams was starting to taper here and possibly coming back. We put out the idea of where that happened before, where you have this false alarm and then it starts to come back up after that point. So you do get multiple false alarms even though you're overbought here on the Williams on the weekly. So the weekly doesn't always need to reset right away. While it did do that over here on the weekly time frame. Whoa. Back here in 2021, that was a bit different. So yeah, basically we caught that rocket ship down here back in January, and now we're seeing this continuation idea of that rocket. So similar to here, you got the rocket ship come up here and the continuation. So if this continues, this could set off something spectacular to the upside. So if you are looking at a short, please consider it possibly as a scalp. This narrative with all of the BlackRock ETFs and whatnot is extremely bullish news, and Powell recognizing altcoins as currency and things like that. This thing is going to bring certain money back into the market. All right, so now let's start to make our shift down into the time frames here. 22-hour overbought on multiple time frames, getting that thick blue background. Money flow is above the RSI here. You should see this money flow come back down to the RSI on the 22-hour time frame. It is screaming retrace. If you go to the 12-hour time frame, also the baseline starting to appear above the price here, starting to suggest a little bit of fatigue here as a pullback could be in order. Baselines and everything are in overbought status. If you look at the 6-hour, we're flirting with the idea of closing both baselines above the price and the crossover event potentially occurring as well. This could be winding up for a double top pitch or triple top, since we've already had that, a triple top pitch to the upside, although we are having the alarm go off here and this baseline. There's some ideas on the table of a 6-hour retrace. What does that mean? Well, if we go to a 6-hour retrace idea in the past, let's go back to here where we consolidated, and then actually it's probably better from where it was actually similar. So similar idea, we came up, we reached into resistance, we had a 6-hour, we had this hourly, we had the 6-hour cross down event, we had the the Williams alarm. Here's where we had like a suppression, and that was higher time frames pointing out, and then boom, we knocked down, then we had a stop hunt rise, continuation to the downside. So this is where it has you at hello with these cross down events. So if we're starting to get that cross down event, a little bit of happiness over here, this could be occurring. It's already starting on the 4-hour. And this is why patience is key. Like, you wouldn't have wanted to open up shorts into these open baselines like this beneath the price. That's showing strength. You wait for the baselines to appear above the price like this, and you get these cross down events, and then you watch for the failure at the baselines, and that shows the sign of weakness or suppression of the baselines. What are the baselines? Well, you can toggle that. It's the first sign of reversal, one of the few leading moving average formulas out there. So this is why the cross up gives you what it gives you, and the cross down gives you what it gives you. And they're not to be ignored, because when they play out with the passion, play out with the passion, play out with a passion. So just play them as far as they'll take you, and stops into profit, and it's good to go. Compounding is key. All right, so if we look at the 4-hour time frame, you're starting to see both these baselines cross down and suppressing the price as we consolidate sideways. One thing you're looking at is a reset of the 4-hour time frame. Now, I've seen this on a Friday before, so we're going to go back to what happened on a Friday like this before, with the 4-hour reset while we went sideways. So this is also an attempt to hold the position while we go sideways. I didn't have high block at the time, so this is a novel moment for me in incorporating high block into the mix. And I also didn't have Momentum Master created at that time too, so we can go back and see what Momentum Master looked like, but at the time I was just using stochastic, so the stochastic RSI was doing something similar to this. Now, where was that time in space? Well, let's go back and say what's up to it on the replay mode. So this was back in October of 2021, I believe. Seems like ages ago. All right, so it was here. And then we came to the top of the range. So it's kind of a similar situation, kind of. All right. So a similar situation in October 3rd, 2021. It was a Friday. Yeah, the Friday we came up here and we held all weekend. And basically the 4-hour reset in a similar manner. As you see here, this came down, we stayed sideways, we held the range, and guess what happened after that? Well, boom. It kind of banged to the upside there. And so if we hold that range that we're currently coming up to, that resistance, while this was a dip down continuation, we are currently building up into resistance, but it's in a similar structure on the higher time frame where we're coming back out of a range here. So if we hold this range and reset the stochastic, even though we had the Williams alarming event and some bearish divergence here on the 4-hour, this was also shown. 6-hour was starting to retrace as well, and you had this bearish Williams idea, the cross down event. The thing that had you at hello that we had to look for was an hourly divergence play, bullish, hidden bullish divergence. So you started to see some bullish divergence forming right here on this on a Monday, and then we started to come back out. So are we setting up to go sideways all weekend? We already had the move on Wednesday, so Wednesday and Thursday took us up here, and then are we going to see Friday go sideways, or are we going to retrace and come back and then go sideways over the weekend in a similar fashion? This is just one way to back test things and test out theories to see what holds water or not. This is where a lot of these back testable levels came from for the stochastic array. So I have these memories of these times and back tested the levels to be true where the alarms occur or not. So we're still flirting with the idea of 30K. Let's go back into the hourly time frame and see where we were looking. So we saw previously 1, 2, and then this broke up to the upside. This is why you wait for the third fatigue failure, the power of threes. Here, this could be a shoulder, head, and possible shoulder, but also the baseline, the trend cloud is thinning in a manner here. This is also intuiting the other side of the equation here, which is this potential of this kind of fatigue on the hourly time frame here. So as we see this attempt to try to cross back over and negate this cross down event on the hourly, we're also seeing that occur, as we said, on the 4-hour and the 6-hour event. So the 4-hour is also crossed down already, and so this is locked in stone and not easy to negate. So we have seen false flags of those before here, and then when this happened on Monday, June 19th, we did point out to you the hourly bullish divergence. We put it out in the group, so you have to watch on the lower time frames here. We're talking about this bullish divergence here. So there was a bullish divergence on the money flow here, and we said watch out for that bullish divergence. This could bang to the upside, and it sure did. So are we going to see a similar fashion of this, where the 4-hour starts to play out and then there's some bullish divergence on the lower time frames? This is what you have to look for as we go into the current price action. Is there going to be some bullish divergence? There is currently some money flow bullish divergence that's spawned off this wick off the super trend zone here, and then we got some bullish divergence here, and that started to bring us back up. Let's go back into the liquidity, start to build the narrative, and bid you adieu as I have to be off to work. Let's go see what's going on. Shout out to everyone here. Do you think the 22-hour has to reset before another move up? Interesting question. Let's take a look. 22-hour reset. So the 22-hour, the 22-hour money flow is what I'm looking at here. So when the money flow comes above the RSI, I've noticed that it starts to deviate. When it deviates, it starts to come back, self-correct, and come back for a retest. So does this appear on the 22? Here you had bearish divergence on the money flow, and then boom, it dropped down to come back to the RSI. Here you got back above. You had some money flow above the RSI, it came back down. And conversely, you had the money flow coming beneath the RSI, and then you start to get some bullish divergence, and then it triggers the stop loss hunt. They're even Steven here, and then we came up. So now we're starting to see the money flow coming above the RSI on the 22. So suggestive of reset. By reset, it does a lot of meandering around nowadays, but when you do get into those oversold and overbought regions, that's when you start to consider a bounce idea. And while it may meander around within that, it does give you percentile. So the fact of it being overbought does suggest that it's going to give you a percentile similar to this, where you come down for like a, liquidity grab situation. I wouldn't be surprised, since the money flow was up here and you had the RSI coming beneath this, that you come back down a little bit to grab some of the liquidity down here. It just seems to make sense to me. Does that mean you need a full reset? You have the Williams high. The last time we had this high was Sunday, April 16th, and then we saw this come down here. But we also had the baselines fatiguing above the price here and crossing over. The baselines are still strong as of yet, and this fat boy baseline needs to come up above the price for it to be genuine as it was back here. So that took some time to occur, as we saw here. This was Friday, Saturday, Sunday, Monday. It took about 3 days for that fat boy to come meander back up. So if we're going to see something similar to this situation here, it would take about 3 days for that fat boy to come back up to here and see that occur. And so we could go sideways, come trap some longs, trap some shorts, and try to ping the liquidity while that occurs. And then so we flirted with the idea of a double top. We got some bearish divergence. The money flow was above here. You had the Williams high. We got the alarm here, and then boom, it was straight downside from there from April 16th. This could be different though. This is our second idea rounding out of here. This could be like a cup to a handle out of here. So how shallow is the handle? Are we going to just go sideways and bang to the upside? When you reach the second leg of the W formation here, like, are we going to try to ping external liquidity outside of here? That's why I said be careful if you're looking to short. This could be just setting up for another long opportunity. So yeah, the preemption of this cloud getting thinner and potentially bearishly retesting and starting to see your way down as this starts to thin. If you start to see this thinning like around here or so at 8 p.m. New York time, let's just say, and then you have this kind of come down here, and then we come back up again and then make our way lower, like we could be going sideways in that manner. And just making like a channel right now. So the hourly time frame, oh, I didn't want to move that. Hourly time frame getting suppressed at the 50 level here and coming back down for a hard reset. You're getting the leading MACD starting to break the domain into the Williams territory. The Williams is starting to reset here on the hourly as well. 15-minute kind of struggling in the sense that it's getting overbought in a quick manner while going up ever so slightly. So the cloud here also attempting to get some bullish volume but meeting with resistance, so this could be what you see over the next few hours. So once again, we talked about how the Asian range likes to pump into a dump. We said that before. See how it was on Thursday. They pumped into a fade into London. London met with some consolidation, some stop hunt rise, and then passed off to London, which dumped it for London close. New York for London close, and then they slowly rose it back up. It's just straight consolidation for the last day, but you see how the interplay of the time of the ranges of time play out. And we talked about back here on Monday or Tuesday rather, how they pump into a dump, fade into London. London passed off to New York, stop hunt rise to the upside. So we talked about how that played out as well. So you just watch how the interplay plays between Asia. Asia tends to pump it before they fade it. So this is just your typical Asian pump before a fade. So we can just put that over here to be more accurate. There's a gap over here that they could come back to, so they could come back to this level at 30,138 or so, and then start to fade it down into a region. But this is why you wait for the power of threes. I was talking to somebody in another group who wanted to short into a candle like this, and I was like, no, you want to wait for the three confirmations. That's your safest bet, because we were talking about it back here, and this third one was definitely not a fade at all, so that saved you the trouble of entering a short there, or at least getting stopped out immediately, because your idea was negated by breaking this high. And so if you end up breaking a range, then it's obviously negated because you're breaking out of that zone. So you reassess. So here's where you have the higher likelihood, because you have a clear range that you can break down at. All right. Well, ladies and gents, that's my story, and I'm sticking to it. We're looking for that pump into the fade to London. The hourly cloud looking slightly weak as we come above here. We could reclaim it and go higher, of course. Always protect yourself at all times. If we look at the 4-hour cross down event with the potential 6-hour, I would look how the 6-hour is going to coincide. This is the 6-hour going to cross down. If this starts to fade into a red candle, then this baseline is going to touch this one and start to lock in a cross down event on the 6-hour. So the 6-hour event could be occurring in about 5 hours time. Keep your eyes peeled for that. We have this daily resistance level that could be occurring as we come back down to another daily resistance and test for support. So coming back to 28,690 could be a test of support that we could be looking for. These are some pools that I marked out from before. We have the liquidity pinged of 20 billion to the downside of long liquidity that we could grab. So keep your eyes peeled for that. All right, ladies and gents, I must bid you adieu. So Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff. And we will catch you on the flip side. Peace.